Hello everyone, and I welcome you back to a new session of this channel. Today we are going to study the meaning and definition of financial accounting, why financial accounting is important, and what are the objectives of financial accounting. Financial accounting is a method of documenting, summarizing, and reporting the transactions arising from a business operations. A business is having lots of operations. Suppose our expenses, our revenues, we are selling our products or we are purchasing from wholesalers. Everything should be recorded in a standard manner, and for that reason we need this financial accounting because it accumulates all our financial transactions for a specific period of time. The time is fixed. It could be quarter, it could be for 6 months, it could be for 1 year. But in international level, many organizations are saving their documents for 1 year. Such transactions are outlined in the preparation of financial statements. When we go for aligning these transactions, here we prepare, and these financial statements are as balance sheet, income statement, and cash flow statement. Generally, these financial statements are of three types: the balance sheet, the income statement, and cash flow statement. Balance sheet shows the financial position of a company, whether it's profitable or non-profitable, and it carries assets and liabilities of a company. Assets shows what we have, what we are having as asset in our organization. Suppose we are having machineries, building, stock, whatever. It could be anything which we have for ourselves in our company. What are liabilities? Liabilities are our dues. We have to pay them back from whom we received earlier. The income statement shows the profits or income of an organization and its expenses. Our income is our sales, or it could be other source of income. Our expenses could be utilities, rent, wages, whatever it could be. And cash flow statement. What is cash flow statement? Cash flow statement depicts our cash inflows and our cash outflows. How much cash are coming in the organization and how much cash is going outside of organization. Now the very important question is here: why financial accounting is so much important? It is important because it helps you to have track of your financial transactions during a particular duration of time. You get to know how much transactions you are carrying. And also, in addition to that, financial accounting helps you to communicate your business finances to outside parties such as creditors and investors. Nowadays, many companies, many big companies like Apple, Microsoft, Samsung, and whatever big companies are there, they are depicting their financial statements to the public, to the investors, to their creditors, as they can gather finances from them, because it shows how much profitable these organizations were in this time frame. Here we go for objectives of financial accounting. The first point: compliance with statutory requirements. These accounting statements or financial statements are having their standard formats, which is a good compliance with statutory requirements of any government where these companies are working. Any country is having their norms for compliance with statutory requirements. The second point is safeguarding of interest of various stakeholders. Many stakeholders are there for a company's financial transactions. If I am an investor in Apple, then these financial statements would help me to analyze the future of Apple. And you also, if you want to invest, and the people who are already investing in these companies, they are getting notice on whether they are going to invest in future more money, more fund, or they are going to decrease their shareholders in that organization. The third point is it helps in the measurement of profit and loss of the business. As we said, we are having income statement which shows as the profit and loss of any organization. The other point is presentation of historical records. You are having all your records with you, and whatever information is needed for you, you can catch it and you will receive it on the spot. Other point is periodic reporting and wide availability. As we said, accounting is focusing on a particular time. It has many time duration to keep the data with itself, and whenever you will be in need of those data, it will provide you back. Meeting the objective of various stakeholders. Many stakeholders are in need of information. They have to have those information for their analysis, and when you get these types of financial statements from accounting, then you will be able to decide for your future investments. The other point is reliability and relevance, as these data are very much accurate and it is based on a date, a time frame, and whenever you are going to have some issues, that would be relevant for you. You can find it exactly, and these data are kept in many softwares, in many books of journals, ledgers, as we will study them in the future. But these financial accounting statements are so much reliable and relevant. And the last is easy to understand. It is very easy to understand because it is in a standard format. It gives you directions and you will find your answer easily wherever you need them. As usual, I hope you've enjoyed from this video, and if it is yes, do not forget to like, share and subscribe the channel, because this would help us to improve our channel and the content we are bringing to you. If it is suitable and it makes you some sort of understanding, then press that like button, as the sharing of this video will increase. Take care and bye bye.